co-founder of Vesper, and it's great to be here. I have an amazing panel here of industry experts on the regulatory side and the commercial side, and just like with everything with COVID, getting confirmations, getting people to be on panels, et cetera, is tough. And I think we hit the bullseye here. Enthused for this conversation. So thank you for joining us. To kick it off, let's do some intros. So Teana, why don't you kick us off, and then Dean.
Okay. I'm Teana Baker-Taylor. I'm the Chief Policy Officer at the Digital Chamber of Commerce, or the Chamber of Digital Commerce, I should say. We're based in Washington, D.C., and we are essentially an advocacy and regulatory trade body for the blockchain and digital asset ecosystem. We've been around probably the longest out of any of the trade bodies that support the industry. We're in our 8th year. And this is really a critical time, I think, for digital assets. We're starting to see this convergence between the traditional and the emergence. It's not really emerging anymore. And the hi-fi movement, absolutely, those bridges are being built. And that really does trigger the existing financial ecosystem and the regulatory policymakers to take notice. So I think the next year for sure, the next probably 24 months are going to be a really interesting time in the policy space for the industry.
What's up, guys? My name is Dean Thomas. I'm the head of institutional capital at Polygon. Polygon is a $10 billion protocol, not DeFi, but it's a blockchain protocol that scales Ethereum. So basically, if you guys ever played in MetaMask or DeFi at all on Ethereum, you'll notice that it's quite expensive at the moment to even move your own money from one wallet to another. Basically, our co-founders first solved that problem initially, and then we've gone on to now do many other things, including do the first ever M&A transaction in space valued at $250 million. The same transaction that would cost you tens, if not hundreds of dollars or thousands of peak NFT minting season on ETH would cost you fractions of a penny on Polygon. So we're seeing massive adoption. So 12 months ago, at this exact moment in time, we had around 30 apps built on our platform. Today we're over 3,000. Our daily active users have exceeded that of Ethereum, and the daily transaction volume is steadily around 6 times plus. So it's very interesting, it's a very exciting time. Not getting much sleep at all for the whole team, so it's just explosive, as Matthew was saying, gaming explosion. And I'm excited and blessed to be where I am, and I'm very, very excited to share this panel. I'm grateful for the invitation.
Thanks, Dean. Dean's been a force of nature at Polygon, and I don't know if you guys have watched the headlines. We're going to talk about the Bitwise piece in a little bit here, so excited to hear more about that. And then on Teana's side, why Teana's voice matters to me is that she's super informed on a regulatory perspective, but she also has an operating background. So it's not just policy and white papers and burning shoe leather on Capitol Hill. This is somebody who's operating exchanges and knows all the compliance back office stuff. So
yes, I have applied many times for those licenses that I'm now trying to get policymakers to make more clear. So I have been on both sides. Yeah.
Awesome. Well, let's kick it off. Dean, what's your perspective right now in terms of Polygon's approach to institutions and looking at DeFi and the ways that they would adopt Polygon and crypto more broadly?
Sure. So when Sandeep brought me in, I actually wrote a short thesis because basically, if you look at the crypto landscape today, according to CoinMarketCap, we're around $2 trillion plus or minus. You compare that with any other major asset class. So I'm from traditional finance, so I worked at Goldman and Blackstone prior to my crypto life. It's around 50 basis points, right? So if you're at 50 basis points and you believe that this is going to be a growing, globally changing technology and it will eventually consume every other asset class, then you assume that there's going to be massive influence, right? You're seeing guys like Dan Tapiero who made this on 10T, right? It was 10T's and worth $10 trillion, and now he's saying it should be 50T. The question then becomes, where does that capital flow, and how do you get the attention of guys like Wall Street, suit and tie folks with very, very structured processes on investment committees, risk procedures, credit risk profiles, etc. And so a large part of my job has been, how do I package the Polygon narrative to be something that is able to be digested by Wall Street? And so a key vehicle that we created recently was with Bitwise. So I've been working very closely with Matt and Hunter, who are both good friends of mine, on creating the first institutional vehicle backed by Bitwise that will allow direct exposure for accredited investors to Polygon. And so a key problem that we're seeing amongst a lot of large funds, and I actually had a meeting with 6 of the major funds at Fidelity, is that they don't have the capabilities and vehicles and the mandate to actually hold tokens, deal with self-custody, actually hold it on balance sheet, and convince the investors that it's safe. And so instead of having them figure it out and come to us, I've been very active in creating vehicles that are able to be held on their balance sheets. And so we have about 5 to 6 different institutional vehicles coming out in the next few months. And so very soon, you'll be able to use the retirement money that you have in your 401k, IRA, and you can just click a button and have Polygon exposure, which I think is very exciting. It's going to be a huge tsunami of capital coming in. And the question is, which protocols, which projects will see the vast majority of that inflow?
How do we think DeFi communities are going to think about institutional communities? Like there's the $100 billion DeFi market, and then there's trillions in the traditional markets. And the nature of decentralized finance was born on the back of real money testing. Folks calling themselves degenerates, right? And it's a badge of honor in decentralized finance. But these are the early adopters, risk takers that are testing these new systems. And then on the other side, you have these super structured, methodical market participants with all the capital. And so how do you think these 2 ecosystems play, interact, or not?
So just show hands, who here knows who Pepe is? All right, cool. So I actually live in a very unique seat where, like, on the one hand, I'll be in one conversation where someone is sending me Pepe news, and the next one I'm in front of the CEO of some bank or insurance company and I have to pretend like I'm actually like a professional. So it's actually quite like, depending on when you catch me, it's actually quite jarring, the contrast. I think the key thing that has been very, very interesting and this massive explosion of DeFi is composability, right? So the fact that and any computer science and engineer people who know this for sure is the concept of abstraction, right? You don't have to necessarily know how to build a car from the ground up in order to drive it very, very effectively. And that's good engineering, right? So most of us here could not invent a car from the ground up, but we could drive it and get us from point A to point B. And so how that impacts DeFi is that with composability, we don't need to reinvent Uniswap, but you can build on top of Uniswap. And so it allows these coders with internet access 24/7, implementation, pushing code testing, and that process of iteration is basically, in a few months, created the innovation that banking systems and financial systems historically have taken hundreds of years to evolve, right? So that is completely eating the world, but then obviously there's a lot of issues in terms of hacks, in terms of smart contract bugs, et cetera, that large institutions with serious money and serious responsibility as fiduciaries have to get comfortable with, right? And so how do you solve those problems? And we're seeing a lot of innovative ways to solve those problems, including, for example, recently we paid one of the largest bounties ever, $2 million, for a crowdsourced smart contract coder who found a potential bug in our code. And we're very happy to do that, right? And so these innovative ways where you're able to source talent wherever they are in the world to help innovate and push towards a common goal is something that I think DeFi and crypto in general should be about. And I'm very excited to see it because the innovation that you see in DeFi is something that is happening at a speed that is impossible for these legacy banks and private equity firms and hedge funds to do because there's so much red tape and so much lack of composability.
I think that when you look at, just going back to the innovation hype cycle, it's a thing and it takes a similar path regardless of what the innovation is. And I think in finance, if we go back to the genesis of kind of the cypherpunk and that crypto is going to decentralize or be exclusive of government and intermediaries, right? And then we fast forward kind of 10, 12 years later, and those intersections and those bridges, and I think Polygon is a perfect classic example of something that sits in the middle that can be retooled depending on the audience. And then there are people like Dean and myself, I'm a farmer, covering maker also. And so, sitting in those rooms and understanding how decisions are made and being able to take that into my job now to help sit as, almost like an interpreter between those two audiences so that they each understand where the other is coming from and try and find that, comfortable middle. I think the reality is we're looking at DeFi communities and maybe those original crypto OGs that didn't necessarily want to have any of this traditional finance, whatever, whether it's the infrastructure, whether it's the governance, whether it's the regulation, as part of this movement, realize now that if anything's going to mainstream and we're dealing with people's money, and we're getting, very close to, I think, a global mainstream acceptance that this is money, there's always going to be some element of governance, and whether that's on-chain governance, whether that is, community code review, whether that's a DAO structure, whether that's greater regulatory clarity. I think we can all agree that if you're dealing with people's money and big, huge institutional amounts of it, there does need to be, some kind of rules of the road just to make sure that we don't have rug pulls and we don't have fraud.
Yeah, no, right on. And something you said, Dean, earlier about innovation cycles in crypto and DeFi are so fast that in DeFi it's hard to keep up with DeFi, let alone if you're a bank that I can't innovate on a bank's code base, right? But thousands, if not thousands, of developers are evolving and building in DeFi today, and they've got antiquated infrastructure, and there's going to be a break point, and I'm not counting the days, but there's going to be, I had the obligatory revolution on my slide at Money 2020, but the technology is revolutionary, no question about it. Now, how does it, the evolution of these two worlds and how they connect will be just fascinating to watch. And let's shift to some of the regulatory pieces, because a lot of people tiptoe around it. I think, building in this space, you have to build responsibly and try and go state of the art on the most responsible token issuance distribution processes possible. But despite doing everything as righteously as possible, there's still a lack of clarity. And investors, institutions, they don't like lack of clarity. Even if it was bad clarity, they would like that more than no clarity. And so we're in this kind of interstitial moment with crypto where the clarity, I think, is coming. We don't know how it's going to be served to us, but if it's done in a smart way, it could actually create this blood vessel of institutions to really come in. Where are we now in that kind of DeFi regulatory dynamic, and where do you think it's going to go over the near term?
So I think from a general dynamic, yes, we are starting to see an incredible amount of scrutiny on crypto assets in general, from stable coins to market integrity on trading platforms, futures ETFs, but a spot ETF, why is that? Still have concerns with market integrity, etc. We're still in this country debating what's a security and what's not a security, which seems crazy to me, but yeah, here we are. We have new administration and a number of the large regulators in this country, and there is still quite a lot of discussion amongst them around who owns what, right? So if we take all that kind of stuff to the side and look specifically at DeFi, I think that there is a number of things about it that policymakers are nervous about. So one of the big things that's been said by a number of policymakers is if there's a service being offered, then someone must be offering it, right? And so when does a founding team decentralize enough so that it actually is a community-run initiative? When are automatic market makers truly automatic? If there's a kill switch, then somebody has control of the kill switch, right? So I think that we're in this genesis point around being able to kind of lay out what the roadmaps are and being able to explain that in a way that makes sense. And I think not just to policymakers, but to each other. So there's, as you're saying, there's every single day something happens. I work in this space, it's my job to pay attention, and every single day somebody will ask me if I saw something or if I've heard of something, and I'm like, no, what's that? So I can only imagine what it must be like if this isn't your full-time job, right? So I think that what you mentioned, and you're talking about code review, that's a great example, or mandatory disclosures, or being able to say who's on the project, what is the project intended to do, what's the roadmap for when this project is going to be decentralized, and there's different suggestions at the regulatory level around how we might be able to do that. So Commissioner Peirce, the SEC, has put forward another version of her token safe harbor, which would give firms a 3-year period to be able to kind of figure that out. And I think those things are helpful, but I also think from an innovative perspective, it would be helpful if we started building with a mindset that at some point, somewhere down the road, someone is going to ask us to be accountable for what we're building. And I think that's critically important. And I think in the past, we've solved problems that exist, and that's brilliant, but we haven't necessarily thought about how we're going to future-proof that, or make it resilient, or make it able to plug in to an institutional infrastructure. And I think that our responsibility now is greater to be able to ensure that we're building things that are going to be sustainable in the marketplace, especially when we're dealing with now trillions of dollars on top of these platforms.
And it's, you read in the news about a hack or a smart contract gone wrong, and that's it takes the air out of our lungs in the community, in the industry. At the same time, I'm inspired that these are the very important speed bumps and training ground for the $1 trillion game that's ahead of us. And so, while it's tough to see some of these rug pulls, some of these hacks, etc., if I look at the banking or financial system, and I look at the ways in which they have leaks in the pail and how it went from a stagecoach with a horse and folks with guns to where we are now to where it's going to go. It's kind of fascinating to see that.
I think a really good kind of comparison is if you go back to Mt. Gox, right? We're still actually trying to clean up the Mt. Gox mess, right? We're still trying to find assets and send them back to where they belong to, etc. But if you look at some of the recent hacks on PancakeSwap, for example, the person that hacked in basically gave all the money back because the whole community was like, look, if this stuff keeps happening, then we're just going to continue to be a joke. And so within the community is kind of self-regulating in a way, or self-policing itself. And that didn't happen 10 years ago. So I think as we all have a greater vested interest in the health and resiliency of this ecosystem, some of those things I would hope to see us kind of mature out of that kind of behavior.
Yeah, so that invisible hand kind of got a lot of that self-governing. No, absolutely. Dean, how about you? How do you think about some of the regulatory dynamics ahead of us?
I think the crypto revolution initially started as a rebellion against the traditional financial system. Right? In many ways, it was like the younger generation inheriting this broken monetary system, whether it's the 08 crisis, whether it's student loan debt, whether it's this beyond crazy government debt that we're burdened with. And crypto was the genesis of basically a rebellion against that. Right? So the younger generation is basically like, we don't really want to go into this structure we've built and laid out for us, or we want to build a better system. And so in many regards, crypto is a narrative of innovation and one of a brighter future for all of us, especially the younger generation. But in any regard, that needs to synthesize with the old system in many ways, right? And so at Polygon, we're dealing with a lot of this in the sense that, like, how do you keep up with innovation? Every day is 24/7 hours, it's on 24/7 trading, it's everybody's pushing code, everybody's like, there's an explosion of everything happening constantly, and you have to try to compete and win because you're going up against all these massive competitors with massive balance sheets. But then the other hand is like, how do you then also reconcile that innovation with going to meetings with regulators and actually having a real discussion about how do we provide policy that allows for innovation but also safety and accountability, which I think is hugely important, and it's an area that as more of us reach a point where we are substantial, behemoths in the space, we have to spend more and more time with people like Teana, with people who are, the older generation who might not really know how to use a smartphone yet, but like those people can, with the stroke of a pen, completely wipe out entire sections of our industry, right? And so we can't risk that after all the innovation hard work we put in 3 years and what's left 2 years. I think whether we like it or not, we have to spend more time with regulators and work hand in hand and see like what are ways that we can help educate them, get them more comfortable with what we're doing, and make it so that it is a much more transparent and accountable space that we can bring in the next $30 trillion of institutional capital.
I think accountability is probably the key thing that I push today. So if you take a look at DeFi specifically, one of the mechanisms that allows DeFi to work so well are stablecoins. And right now we have the Biden administration has tasked a team of people, the president's working group on financial services, to take a look at stablecoins. It's a big deal, right? And so I think it's great for the industry that we're at that level where the president of the free world is saying, well, what are these stablecoins? Somebody needs to figure this out. And at the same time, when you look at how stablecoins are built, being able to explain that they're not all the same, that they operate differently, and there's nuances to them that are mission purposeful, right? They are designed this way for a reason. But at the same time, if you're going to say that something's back one-to-one, then it needs to be back one-to-one, right? So when you're trying to explain why maybe somebody said something before and now it's different today, that's where the accountability comes in, and that kind of trust factor is important to be able to start to kind of create a safe place for people to be able to innovate without having it come crashing down on them later. So to me, I think that accountability is probably the key thing going forward today, because you can kind of explain away some of the stuff that happened before, but we should expect this scrutiny now. It's not going away.
Yeah, and I understood about the Biden administration. So everybody right now in crypto is saying, oh, what is the CFTC saying? What is the SEC saying? What's Treasury saying? And looking for a prescription for each agency to come up with some miraculous strategy to say, hey, this is how crypto is going to look like in 10 years. What I would like to see, and I think is part of the mandate of the Chamber, is a national action plan for crypto, which means that this technology is, on the level of internet, railroads, telephony, important for America. And once that is proclaimed, then everybody else gets to say, okay, based on that framework, based on this strategic imperative for this country, internet level stuff, bigger than the internet level, internet value, we got to get our act together.
Yeah.
And so that's, I think, instead of saying, how do we do these 10 things with another 20 paper cuts underneath them with all these agencies and all these jurisdictions, it's almost like going to any institution, any Fortune 500 financial service company on the planet. If the CEO, if the senior leadership team is not into crypto, it's not as inspired a dynamic than somebody like, you see this with like Square and others that, the CEO is saying, yeah, crypto is important and we're investing in it. If it's like, corporate development, innovation group, et cetera, and the CEO is not speaking crypto, it's a lot harder to kind of get that. So it's like, I always tell those teams to say, arm me for you, and let's chat with your leadership team to kind of open their eyes on what's ahead, both risk and opportunity, because it's profound. And I think some of those narratives are going to be really, really important going forward.
Yeah, great one.
So with best intentions and assuming good things happen for DeFi, what does DeFi look like in 5 years? I mean, that's like an eternity in crypto, but I view this, and as part of the discussion I had earlier, is that there's the chutes and ladders of DeFi are scaling and getting built out. Institutions are adopting crypto. How do they exercise crypto? How do they get leverage off this? How do they do more things in these chutes and ladders? The intersection of that with DeFi is going to be profound. I think it's going to create a lot of activity once that connects. But we have some work to do, and I think it's going to be it won't be as much of big banks saying, hey, we're going to do X, Y, and Z. It'll be like a gamer has $2 million of gaming assets and they got a loan to buy a house. And I think those stories more and more compounding on digital assets, digital goods, tokenizing real world assets, and being able to financialize them in the chutes and ladders of DeFi is really going to get more and more inspiration.
Well, there's this a kid. I mean, I'm just going to try and come up with a better way of saying this. Excuse me. There's this 13-year-old kid in Goa, built something on Polygon as well. I think it's on his third project now. He just got another $300,000 in funding. He's 13, taught himself how to code Validity, and basically started doing all of the stuff on his own because he's 13 and he couldn't KYC on a centralized exchange, right? And so, now he has a number of lending projects, and he's got, I think he's got an AMM that's doing something. There's 3 or 4 things that he's doing. And so I think, who's going to build this, right? So we've got, the institutions that are looking at how they want to play in this space, because quite honestly, I was in fintech when fintech wasn't fintech yet, so I'm old. And this used to be, fintech's going to have the banks for lunch, right? Are they going to steal other customers and run away? Are they going to be just coming down the pipe for payments? This is just going to become a utility. And I think to some degree that really forced the banks to look at the services they were providing, how competitive were they, continuing to not serve the underbanked in a way that really promotes, sovereign wealth creation, kind of keeping poor people poor. That sucks. So, crypto has a way of being able to fundamentally disrupt that, right? But there is going to be a convergence of stuff, and I think that it won't necessarily be like for like. So I do think that there will be kind of this institutional DeFi plug. I don't necessarily see, Goldman Sachs running a DeFi platform, but I do think that they're going to want, the exposure to the upside and plug into all these places. And I think that, our layer 2s are fantastic for being able to solve that utility. But I also think we do need to get, faster, actually deliver the promise of being cheaper, and most importantly, I don't know, how many people in this room have done a transaction on Uniswap or PancakeSwap? Okay, so a fair few. How many of you have a MetaMask account? Okay, now, so that's maybe half the room. It is so hard, it is so clunky. It's such a pain in the ass, right? And so you think that there's this core group of people that are willing to kind of muddle through that, right? Because it's cool once you get there.
And find 100 billion in that fashion, right?
Right.
It seems like
it's crazy when you think about it, because it's clunky, right? So I think when we think about building for the future, it needs to be so much easier. Going back to that kind of killer app mentality. And we've done it before, right? The smartphone didn't used to be quite as smart as it is now.
Yeah, a lot of this technology isn't like a picture, it's going to be static like this forever. It's a movie. It keeps evolving, the UI, UX, and all that stuff evolves. We need it to evolve, because V1 DeFi was absolutely terrible. V2 is better, and it's going to continue to improve us. Dean, what do you think DeFi is going to look like in 3 to 5 years?
If I knew, I would be betting behind it. I think if I told you I knew, I'd be lying. I think DeFi reminds me, crypto in general, reminds me a lot about this study I read about a couple of years ago. Don't quote me on exact specifics, but I think there was a Harvard Business School study where it was they had different groups of people play this blocks or sticks game. And it turned out the best categories that did really well in this game were actually not what you'd expect, which were PhD scientists, MBA students, actually middle schoolers. And the reason why they were really good at it was because they just tried a bunch of stuff. Mm-hmm. Right? There was a lot of really smart people sat there and I know the answer, and they thought about it but didn't actually do it. Whereas I think in crypto and DeFi and smart Solidity, the 13-year-old, he's just trying a bunch of stuff, and he's messed up on a lot of stuff, and then he came up with these 1 or 2 things that may or may not succeed, right? That's where innovation happens. That's where the next unicorn or $10 billion company is coming from. It's not coming from these behemoths like Goldman Sachs or
words. Does anybody know what I'm talking about when I say words? A bunch of people created words. You buy words. You mint words. So it might be golden sword with diamonds, or it could be, caterpillar digger. I don't know. They're literally just words.
Loot is a project.
Loot is a project, yes. So with the anticipation that later, when the metaverse gets built, that these words are going to turn into things, and you're going to own the things, or the right to create the things that are then going to be used across this. Like, the concept is fantastic. It's out there because it's not here, but it just captured the community by storm, right?
I was pitched very early, so if I knew what the future looked like, I'd be a lot wealthier.
What would you like it to look like? Maybe that's
I think we all, like, the really cool thing, and this goes back to Steve Jobs, it's like a little cliche in the sense that, like, the world that we live in, like, you can change it, you can mold it in the sense that, like, everything that's clunky or everything that's a pain point in your user experience is a problem, potentially $1 billion problem plus that you can solve, right? That's what Polygon was. All Polygon was like, initially, these 3 co-founders in India were like, Ethereum is awesome, Vitalik is awesome, this vision is beautiful, but it doesn't work right now, it doesn't work today, right? Like, a lot of these things are too expensive, it doesn't work. How do we solve it, right? And that simple question, that simple solution became a $10 billion protocol, right? Making all 3 founders billionaires in the process. And so the reason why crypto and DeFi is so exciting is because you don't have to have the pedigree, Harvard, Stanford, MBA, whatever, to have that track towards success. If you can be a 13-year-old self-taught coder, if you solve a real-world problem, you can make a tremendous amount of money if money is what you're after, right? Even just like the $2 million bounty that we paid out recently, like, money is not in lack. If anything, money is in oversupply. We are actually lacking really innovative people with high levels of consciousness who want to build things that are good for the collective, not just for themselves, right? And so we talked about this in the prep conversation, in that, like, sure, making a lot of money is great, and I think all of us in this room, if you guys already played at MS, like, we are still early, and we are going to do fine financially. I think as we rise up in this community and rise up in positions of responsibility, it's really, really important that we devote time and energy to being very thoughtful about what the future version of this world looks like, right? We're seeing a lot of different governments have different theses around who should control what, how should power be dispersed, how should capital be dispersed. And for us at Polygon, we are fully behind the decentralized vision that Ethereum and Vitalik kind of laid out for us. And we might not win, we might, but, like, the thing is, like, we want to fight for that vision, whether we win or we'll ultimately lose. We don't want to be one where a handful of people can shut you down anytime and basically take all your money and wipe you off the face of the internet. And that's not a world that we want to be a part of, because if the roles were reversed and we were not in those positions of power, we would not want to be in that version of the world, right? And so it's hugely important for us to take responsibility to be like, our actions, who we choose to work for, which protocol we devote our time, energy, capital behind, will shape the future of the world. And so it's something that all of us should think about when we rise above that initial, like, survival layer of existence. And something that keeps me up at night a lot is that I'm very painfully aware of how momentous this moment is in this transition time between, the degen small crypto community into the widespread adoption of governments and countries and institutions, and who gets to provide the technology to those institutions, countries, et cetera, and what are their fundamental values and ethos is going to shape the futures of those countries and groups of people. And it's something that we should very much have a voice behind and share our opinions about, because it's going to decide which future we live in. And it's very, very important. I don't know, it can turn really badly really quickly, right? There's, like, a lot of versions of the future where I don't know that I would want to be in that version of the future. And so, like, that's why it's hugely important for us to fight for the existence of Polygon, of Ethereum, and other believers in a decentralized world of computing and capital.
Yeah, no, it's very inspiring, and it's literally up to us, to shape that, to have that voice, to push for this future we want to see, which is a lot more fair, a lot more inspired than what's going on now. This is totally great. Let's do some Q&A. We got 2 luminaries on stage, and I definitely want to pass this around if there are any more specific questions that the audience want to hear.
All right, well, this gentleman got in line like 20 minutes ago, so I'm going to hand it.
Thank you so much, panel. It seems like already here today, all these sessions are focusing really on the choke points of DeFi about to explode in ways that just make the past few years look small. So in this panel, you, Teana, your expertise, but supported by Adina and Matthew, you've all said that. Actually, my question is zero knowledge proof seems to be that neutral island you could have the fiat traditional worlds and the crypto individuals meet on in the middle. Fiat can't argue that these blockchain-based tools are way better with protocols and security and that, and the folks in DeFi would really want a technology that will allow them to prove who they are without having to give that personal information. So do you see an innovation in zero knowledge that is at the edge of blowing open and allowing this floodgate to open up and have everybody kind of meet in that happy ground in the middle?
Well, I'll tell you from my perspective, I have this conversation fairly regularly with policymakers around the world, not just the US, around better KYC. And so if you take a look at our policies around KYC and counter-terrorism financing, and you look at directives that the Financial Action Task Force basically kind of is instilling on crypto the same way that they have done on banking, those policies today catch about 1% of money laundering that exists. It's tiny. And so whilst we're playing this kind of cut and paste game to keep our policymakers feeling more comfortable, the reality is we're not stopping a lot of money laundering, right? Now, I really believe in this technology for a number of kind of bleeding heart reasons that aren't about making a lot of money. I would really like to see people be able to have access to fair financial services that allow them to create better futures for themselves and their children, right? I think that's what the promise of this decentralized monetary system is. And so when you put those same rules on top, when people don't have good access to identity, or to just even access to walk into a financial institution and be able to verify who they are, because it's like 3 hours away, it's really difficult, right? So what I would say to you is, and to everybody in this room, this is the problem. So building an automatic market maker that gets 300 million in AUM overnight, super sexy. Everybody loves that great story. Building something with zero knowledge proof to facilitate cleaner, easier KYC. Nobody wants to build that. But I'm telling you, there's probably 4 people in this room that could. I cannot. I could tell you what good would look like and help you put together what that use case is. And I could get you buy-in from policymakers, but I can't code that. Somebody can, and we should. And so when I go into policymakers and I say, yes, this is totally possible, and they go, brilliant, tell us who's doing it. It's like crickets, right? Because nobody wants to build the sexy, the unsexy, boring stuff. But yeah, build that. Build it.
The infrastructure.
So I can tell this gentleman is at least has high potential of being a Polygon fan, because you asked that question, and I appreciate that question. So we actually carved out $1 billion of our treasury just for zero knowledge proofs. So it's our understanding that the final frontier of Ethereum scaling, solving that problem, will be a ZK solution. And so we did the $250 million acquisition for Hermes network, which is it's the number one, actually yes, I saw it's that. It's the cheapest L2, official L2, and it's going to be actually one of the key ways. So right now, if you guys are on Ethereum and you want to split a dinner bill, the fees must cost more than the dinner bill, right? So there isn't actually a really good Venmo version of that in Ethereum yet, right? And so Hermes is providing the rails for an app like that to build. We actually have 2 more acquisitions that we have consummated, but we have not yet been allowed to announce. One is even larger than Hermes. So we are fully aware of how powerful this technology is, and we truly believe that that is the final frontier. Whoever solves that problem is going to win the Ethereum scaling race, which is what we're all about. And we are very, very much dedicated to investing behind, supporting devs who want to solve their problems, whether they bring them in-house in acquisitions, providing them like minority investment, or just helping them integrate with the Polygon ecosystem. So I appreciate that question very much.
All right, gentleman in the front row, do you have a question?
Thank you, guys. I was just wondering your thoughts on the, obviously there have been a lot of stablecoins that have popped up. There's been some scrutiny around stablecoins. What are your thoughts on a Fed coin and whether or not that comes sooner? Does it come at all within the geopolitical context, U.S.-China? What are your thoughts on a Fed coin?
Are you asking about a central bank digital currency, U.S. dollar central bank? Okay. Do you want to take this one?
I think what's shaking up here is there's 2 money stacks that are upon us. The Chinese money stack, and then the rest of the world. The rest of the world being more permissionless, etc. And I would say, just on the face of it, it's not that inspired to be as a stablecoin because it's just, you can still print it more and you have that dial. So it's just like it's more efficient for the government to just print more, tokens, quite frankly. But it doesn't really change the nature of the game. But I do look at stuff like China and their go-to-market with not only a digital currency, but with a new format of money, such that when they go into Africa or Brazil with a bridge or schoolhouses or highways, etc., that money, that financing comes with strings. And those strings are adopt your payroll, AP, blah, 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 infrastructure on this money stack that's different than the existing kind of infrastructure. So I think the go-to-markets for money, the money wars, the money infrastructure centers of gravity are upon us, and I think how China plays versus how the U.S. rest of the world plays will be fascinating to watch unfold.
I think that the one thing I'd like to just, I say this over and over and over because of that question. A digital dollar is not crypto. It is a digital version of fiat that we have today. And does it open up other infrastructural abilities?
It's actually kind of funny because if you read the white paper for the U.S. dollar stablecoin, kind of like, you could rug pull this, you could turn this dial, and you're like, it's not really an inspired project in a eyes wide open way. So it's kind of fascinating.
So, but I don't see, right now, there's not I think enough institutional interest in pushing that forward. What it takes, I think, at a government level, it's going to be pretty significant. And I don't think that the U.S. government yet feels like this is an imperative. Hence, some of the attack on stablecoins. And so, I actually think that the juxtaposition between those two things is good, right? And the whole idea around whether or not stablecoins, pose a systemic risk. I think it's good to be asking those questions. And I think the greater question is, if there is a really successful CBDC from China that is offshoring their capital wherever they want it to go, that is a greater kind of existential threat to the US dollar than stablecoins.
All right, and that's the point where we're going to wrap it up and do a quick set change for the next panel. So give a hand to the panel, please.